Good morning, everybody. It is, let's see. Sorry, I know what time it is. 7:27 on Friday, the 23rd of February, 2018. Um, Hope you all had a great trading day yesterday. Hope you've all had a great trading week so far. I know we've had some fantastic trades going on, and we should look forward to more of them. And I want to take a. We're going to probably starting today. Um, we're going to focus for a little while on the trading with the Ichimoku system. And so this morning, we're going to go over not only the trades of the day, but we're going to go over the setup. And I want to go over the setup prior to making any trades today, because I think it's important that we review this. The Ichimoku system it's old. It came out in the 60s. I can't remember the dude's name, but Ichimoku was in his name. Ichimoku Kinko Heyo Hayo, however you pronounce it. It's Japanese. It literally means the market at a glance. All right. Now, I'm just going to take a new chart. And we have data coming out here, so bear with me. We'll go over these trades real quick. But the Ichimoku system, it's common in any charting software probably has this as a default. And it's usually listed as an indicator, not a strategy or anything. So Ichimoku Cloud, if you just type in Ichi into your trading view indicators and you click it, and here you go. This is it. And so, what the heck is this? How does this work? What does this do? Well, it's the market at a glance. That's what it means. And so what we're looking at is a whole bunch of lines, right? Well, let's break them down. There's Japanese names for these: the Chico span, the Kumo is cloud, the Kinjinsen, Tenkan-sen. Those names we really don't have to worry about. What we are concerned about is how this operates. All right. First things first. Keep the defaults on, but I'm just going to remove everything at first. Okay. The cloud is the period. Well, let's go over these quick. We have three lines. It's moving averages. Now you know how much I hate moving averages, and I do. But if we look at these levels, we see this thin blue line. Let me make them thicker. The thin blue line is a 9-period midpoint average, and the red is a 26-period midpoint average. And that's because in the Ichimoku system, we had they had 6 trading days in their trade week, and I've never really changed these that much. I just keep them as the default, and that has always worked well for me. This is the system that I used to learn how to become profitable. You follow it. I mean, pros use it, still follow it. I mean, this is a tried, tested, and true method. There is nothing wrong with Ichimoku. And anyways, we look at these lines, we see this, the blue line is the conversion line, and the red line is the baseline. So we have a fast and a slow moving average. Now the cloud, all right, the cloud is these two lines moved forward, okay? It's moved forward in time. So look at this price action right here that I'm hovering around, and then you can see that it is thrusted forward here, okay? And so the cloud changes, the cloud color, some people care about it, some people don't. I really don't. But the cloud color, this is kind of telling you where is price in relation to past movement, not only in the past, but thrusted forward. All right. Now the behavior of this is that when price is trading below the cloud, we only take short trades. When price is trading above the cloud, we only take long trades. There's other conditions that need to be met, but we'll get to that. The next line here is this green one. And for me, this is the most important component after the cloud. I tend to not trade with, I really never trade with the conversion line. I'll keep the baseline, but I never trade without the cloud and the lagging span. Now the lagging span is the current price action moved backwards 26 periods. Yeah. So where this has moved forward 56 periods, if we see that right here, go to inputs. Sorry, lagging span is back 52 periods. And so that's our current price area. You know, you can see it a lot easier if we take this as a line, okay? You can see how they mirror each other. See that? Now the lagging span is kind of our trigger. Oh, well, I call it my trigger. The lagging span kind of tells us really what's most important about it. Like when I say one of the most important things for traders to learn is not just how to take a trade, but it's when to not take a trade. And the lagging span really helps us do that. You can trade, you can trade a breakout. You know, when price leaves the cloud, they say that, you should go long or above it, or if it goes below it, you should go short. Well, the problem with that is you can get kind of what you have the problem with is with moving averages. You get whipsawed, you get in and out and in and out and in and out. The lagging span kind of prevents us from making the mistake of getting too early. So for example, let's just look at this price action here. Let's go to the market replay and go here. All right, now look at where the lagging span is at. I'm going to hit play. Okay, that's going really fast. Now if I wanted to go short right now, I could go short. Oh yeah, keep going. The lagging span, we only want to go short when the lagging span finally leaves the cloud. All right, we can see this kind of repeated over and over. Trying to find an example. Sometimes it's hard to on 15-minute charts. I'm using 15-minute chart. I don't know why, but and here's another thing that why I don't like to. So another way that you can use this is to do crossovers, like when this crosses go long. There's a danger to that. Just because it crosses up under the cloud doesn't mean that price is going to continue that direction, and vice versa. I think we've all had experiences with those kind of moving averages proving us wrong and making us pay the price. You're much safer and almost guaranteed a great trend entry is if price is sitting in the cloud and then you wait for the lagging span to break above. Okay, because that means a lot of the activity and testing has already happened. Here's the rule. If price is in the cloud, you do not take a trade. You do not take a trade if price is in the cloud. You don't take a trade if the lagging span is in the cloud. All right? You just don't. When do you exit? Where do you put your stops? You put your stops below the cloud a little bit. All right? Where do you buy on pullbacks? This is where the baseline comes into play. This is where I don't use the conversion line. If we're in an uptrend, what's very bullish is when all of these conditions, you have lagging span, conversion line, baseline, and price all above the cloud. Then you are in a very strong bull move. When price pulls back to the baseline or the top of the cloud, that's where you buy in pullbacks, all right? That's where you short on pullbacks as well. You're trading here, short as it came back, falls back down, short here, but it kept going against you, but you short on a return to the cloud. When you start to see this happening, and here's like Bollinger Band squeezes, okay? You don't need Bollinger Bands if you're using Ichimoku, because you know when you are in a squeeze, and that is when price is trading inside the clouds and it's flat. Then you know you're in a squeeze. Let's bring this to the hourly, because that's what I traded on. Okay, so we know we're in a squeeze here. We know we're in a squeeze here. Here's the thing. The clouds, when they're tiny, when they're thin, and price is trading in them, that's a sure sign you're in a squeeze. And here's the other thing, is that when you're trading Ichimoku and you're going to buy and sell on, or you're going to go long or short on pullbacks, the thicker the cloud, the more probable the bounce off of it. The thinner it is, the least likely it is. Okay? We can kind of see that happening here in a little bit. As the cloud starts to thin out, it gets less and less resistive to price. All right? So keep our eye on that. But this isn't the only thing. Now using just the cloud, just one period, I think is fine. I think that's fantastic. But I prefer to use 3. And that is where this chart is at. So to make this really easy, all right, here's the chart we just looked at, all right? Then I put another Ichimoku on my chart. I put 2 more, okay? And the second one, you'll notice, is just the cloud. Okay, but I take all the values of 9, 26, 52, and 26. I multiply them by 4. All right, so instead of a 1-hour cloud, now we have a 4-hour cloud. All right, and then I color it kind of in orange or whatever color you want to use. So this is the 4-hour cloud. All right, I have my 1-hour cloud, my 1-hour lagging span, my 1-hour baseline, and I have my 4-hour cloud. And then I have my 8-hour. Okay, so I can look. One sec. I can look at this entire area. Okay. And I don't have to flip through charts. I don't have to change time zones. I don't have to do anything. I know where price is at in relation to an 8-hour time period. I know where it's at in relation to a 4-hour period. And I know where it's at in relation to a 1-hour period. Sorry, I was checking my texts here. I'm supposed to help my folks move my grandparents' stuff somewhere and this weekend, but we are getting a crap ton of snow, so I got to leave this evening to get there. Okay, so looking at this, here's what we got going on. Really, basic kind of moves. I put lagging spans for these on here, but I don't always have them on. If I want to know, like if we're in a squeeze, right? If we're in a squeeze here, like we are definitely looking at a squeeze. And what's very bearish is where price is at in relation to the clouds. Okay, we're below the 4, we're below the 8, and we are inside the 1 hour. Okay, now I want to know where the lagging span is on in relation to the 4-hour cloud. We're kind of inside of it. Okay, we're kind of inside of it. Where are we at in relation to the 8-hour cloud? You can barely see it, but it's there. So we're inside the 8. We're still inside the 4. But on the 1-hour chart, my lagging span is out. So here's the strength. If we waited to go short until this lagging span was out of the cloud, then we would have shorted right here at 23.85. And that's a nice drop down. Rarely, I mean, it happens, but when you get a break of the cloud with the lagging span, you're in a good position for some nice pip movement. Now, looking at the current price action with the euro, we know that we're below the cloud here. We know that we are below the 4, the 8. The lagging spans in the 4 hour are almost broken. Now, I don't wait till lagging spans broken on all these to trade. I use the 1 hour, and you have to use kind of your trader's judgment. But I am looking at things flattening out here, which is okay, because if we get flat, everything kind of consolidates. And, then I don't really have to worry about what's going to happen. I have a good move ahead of me either way. I already know that my lagging span is here, and that it's trending neutral. So I don't know if I want to take a trade yet. I'm really not going to want to take a trade until we get below here. I'll need a break of 122.80, 122.70 to go short. So we may still go short here. We'll look though. Okay, but we're going to be using this, and then I use 3 of the same oscillators. Okay, composite index. Again, you can go to, or you could use the RSI if you wanted. The composite index is you just type in composite, and Constance Brown Composite Index by Lazy Bear. That's one we want. Okay, and the same thing as I did with the settings up here is, here's the 1 hour, and then I take them all divided by 4, and then I multiply these values by 4 to get a 4 hour, and then I take them, multiply them again by 8 to get an 8 hour. So I have a composite index here on the 1, 4, and 8. And how these behave is that when the red line is our composite index, when it's above both the fast and the slow RSI averages, that means we have a short bias. Okay. So we have a short bias looking at the 4 hour. We have a short bias looking at the 8 hour. We have a neutral bias looking at it on the 1 hour. Okay, so we're just kind of looking at what our options are here, and that's what we're looking at. Okay, now let's take a peek at our trades from yesterday. So yesterday we wanted to go short on the Aussie dollar. We wanted to go short at 78.19. Is that right? 78.19. Yeah. We had like a return. We just kind of floated around this area. It wasn't a great trade, which is unfortunate. But we are, again, looking at this chart. We'll just go over the trades and we'll come back to all these charts. Then the dollar yen, we wanted to go long at 107. Obviously, that did not work out. We had some strong moves down yesterday. UCAD, we wanted to go, where are we at? USDC. We wanted to go, we wanted to buy at a pullback to 127.11. Maybe I meant 126.11. I think I meant 126.11. But here's the UCAD. We just kind of had the slow trend up. Looks like it's about to get a little bounce there. Had some Canadian econ news come out here. Euro, dollar, we wanted to go short at 123.08, which has worked out. Or we wanted to go long at 123.6, which did not happen. All right, now we have to take a peek at the activity. Let's look at cryptos real quick. Our majors. Bitcoin is catching a bid. We're back above 10K after a bit of a drop off. Litecoin, same thing, bit of a drop off, but catching a bid back. We're back above the 45. Ethereum is probably the biggest gainer. We're sitting here at the 875. We really need to get above this. We need to get above this, and we need to get above this diagonal line. This diagonal line represents a the long-term downtrend. So we should expect to see some piercing and breaking of that. I really believe that we're on our third leg up. So let's keep an eye on that. So, but look at the euro trade. We traded back up, kind of got rejected in, around the 50 and 618 retracement zones. Rejected at the top of the 8-hour cloud, or the bottom of the 8-hour cloud. So we could have again, if we're in the cloud, we don't want to take a trade. If we're in this whole structure, we don't want to take a trade. So my Gann trading is different when I'm using the Ichimoku system, because if you're going to trade Ichimoku, you got to trade Ichimoku. So we're not going to trade the euro until it breaks down. So we're only looking to go short on the euro at 122.80. Okay? And unless something wild happens today, we're not looking to go long until we break all the structure up here. I usually wait till we break the 1 and the 4 hour before I do anything else. Let's look at UJ. Okay, UJ. Now we're below the 1 hour, but it looks like we're finding some support off of the 4 hour cloud, at the bottom of the 4 hour cloud. We have supportive buying structure on both of our. So we have supportive buying structure on the 8, on the 4, and the 1. All right. And we are finding supportive buying structure because we are at the cloud here. Now, where do I want to go long? Well, I probably only want to go long. Now, just take a peek at this. From this entire downtrend starting back let's start from back up on the 8th of January. 1, 2, 3, 4, 5. We should look for a third, like a 1, 2, 3. So we got 1, 2, and we should expect a third leg drive up. And you can see that we're getting closer and closer to all of these areas kind of converging and coming together. That could be for another move down. That could be for a move up. But we're not looking to trade or go long here until we break the 1 hour cloud. And so does the lagging span. So we're holding off on this trade here. Aussie dollar. Now, we should go short here. Why should we go short? All right. We have found some resistive selling off of the... Now, it failed to go higher. It came back down. We found some resistive selling off of the bottom of the cloud and on the baseline. We're below... look at our lagging span in our 4 hour, this lighter orange line. We are more than likely going to move down. Okay, we busted down before, failed to move up higher. So we're looking to move down below the 4 hour. We're already below the 1. And the 8 hour lagging span is also below its 8 hour. All right. So we have a good short bias. We've got all this structure above us that can act as resistance. So having a short bias here is good. And, let's look at this from another point of view. The Aussie dollar. We may just have a flat trade. We got a lot of resistance on this arc, which is kind of where our clouds are sitting. Resistance on the 45 here. And we've tested this midline quite a bit. We could have a big drop down, possibly. Aussie dollar, what are we looking at? we have supportive selling structure based on these conditions here, supportive selling here, and supportive, well, neutral area on the 8-hour, which makes sense. So the Aussie dollar is a good sell setup. All right. Now, what's our next one? New Zealand dollar. New Zealand dollar trending down. So we are below the 1-hour cloud. You know, we traded up. We found, where did we find resistance? The bottom of the 1-hour cloud and at the and at the baseline. Okay. Let's look at where we're at now. So we're technically entering into some consolidation. We're in some consolidation on the 8-hour, which makes sense because we have not moved much at all. You know, all week we've moved a total of 74. I mean, yeah, not many pips. So we're looking at a little water here. What the heck is that? We have the price bounced off the top of the 8-hour cloud, moved up, rejected, but so that's kind of a bearish signal that we found support here, but then we're promptly kind of rejected off of it. Look at the 8-hour cloud lagging span. That's right kind of at the base of this cloud. And the 4-hour lagging span is inside the cloud, and we're outside on the 1-hour. So we've got a good, and we're trading below that cloud. So this is a good short signal right now. I don't like, okay, I'll say this, when you're in the cloud, don't take a trade. The 8-hour is more of like a reference for me. I will take trades inside the cloud on the 8-hour if we're below the 1 and the 4-hour cloud. All right. So this is a good short to short here, or we want to short on a pullback to 170, 73.11. So we could short even right now at 72.94 and or a pullback to probably 73.18.15. Sorry, 7.29, 72.94 or 73.20, we'll say. Those are kind of our options there. Let's see what else. Oops. Hold on, I'm fiddling with something on my phone here. All right. Okay, let's look at UCAD. Okay, so we've kind of got, notice the bullishness of this move here. We are above the 8, 4, and 1. But we've kind of come back and, you know what? Not even looking at it. Don't like that candlestick and all that situation there. Never mind. We won't touch that one. Pound dollar. Okay. Now, we have a interesting kind of a setup here. We are inside the 1, 4. We're inside the 4 and the 8 cloud. And we're above the 1-hour cloud. So, but just look at this. I mean, this is a squeeze. This is a squeeze on the 8-hour, on the 4-hour, and we're not really in a trend on the 1-hour. You know, the lagging span. When I say when it crosses the cloud, I really don't consider this thin area to be a cloud. That's not much of anything. So we're not looking to take a trade yet. We should be looking to take a trade on a break below the cloud here again. So which would be a break below the 8 hours. So we're looking at the 139.29. Sorry, that's Euro pound. Ooh. Well, well, well. Oh, wow. Okay, we're in short territory there, ladies and gentlemen. Now we could also short on a pullback to the 0.8820 and the 0.883. All right. Looking at a return to these areas. But we've broken out of this entire area on the 1, 4, and 8 hour below the cloud. That itself is a strong signal. So let's keep our eyes on that. Dollar Swiss, the Swissy. No trade. No trade. So you can just kind of tell sometimes what you're going to do. Let's go over these real again. You know, dollar yen. Wanting to look for I don't want to violate the Ichimoku rules, but to me this is looking like a good buy area coming up here. So I'm gonna say long at 107.12. All right. Let's look at these cryptos. Bitcoin. So Bitcoin is found support within the 4 hour. That's good. You know, we crossed the base. We'll see how much resistance we get returning all the way up to this 1 hour. Litecoin, very similar situation, structure, and setup. Ethereum. Same thing, you know, this is kind of good signal where we've got rejection, but we're not totally selling off here either. It looks like we're accumulating for another push up. We've got a good buy signal on the 8 hour, sell signals on the 1 and 4, but really probably look at the 8 hour considering how long we've been moving down. If you're going to want to wait to go long, wait for this lagging span to cross above the cloud. But I tell you, cryptocurrencies, they're kind of their own beast. When they move, they move. And I tell you what, when the most important kind of analysis here outside of the Ichimoku is this orange line, Ethereum. If it cracks 88.75 and this line, we're shooting up. And we're shooting up hard. Okay? Cool, cool, cool. Again, so this is the Ichimoku system. And I think for those of you who follow me in the morning, trying to learn, I'm going to do a Gann series with you all. But the Ichimoku system is definitely a tool that I think anybody can use. And if you trade it mechanically, I mean, I have to try to remember not to. It's frustrating if you've been trading for a while because you could take the Ichimoku system and you can kind of. It's like any tool or skill, you know, when you're new at something, you should just follow it to the T. But it sucks when your teacher sometimes doesn't, because I make it seem like breaking those rules is fine, and it's not. I've been trading for a while. I do this for a living. I've made money doing it, and I'm comfortable with my adjusting a system to my own trade style. If you're new, this is not a dig. You're not ready to do that. And what I have to do is do what I'm asking you to do, and that is trade this system according to its mechanical setup. All right, so again, let's look for some nice trades, and crypto is going to be some great trades. I tell you, I posted an idea in TradingView here. Where are we at? All right, yeah, I posted a couple. I posted this an hour ago, Gartley's, if you like Gartley's. This is our kind of a target area on our D, 24,000. UCAD, I have a long target pointing up towards, this is on a weekly chart, towards the 150 area. Dollar yen, there's a bias for coming all the way up there. Also, there's another Gartley for all the way down there. Dow Jones Industrial did that the 16th. To move down below its most recent lows, shorting. Oh, let's see. I think that's about it. Let's double check our trades here. Euro trade. Looking very, very neutral still, struggling to find a direction. Same with the dollar yen. You know, dollar yen, we're probably going to have a short bias, possibly. Aussie dollar. Aussie yen. We're going to start trading this pair. I like this pair. New Zealand dollar. UCAD looking like more weakness here. So, yeah. We got some trades coming up, folks. Be some good trades. We had a good week for the most part. Good week. And, yeah, we should look forward to a lot of great trading opportunities as we're going forward into the next month. How many days are left in this month? Ooh, it's a 28. Ooh, less than a week left of this month. Cool. Anyways, we will see you all not tomorrow. See you Monday. Guys, have a great, safe weekend. You know, if you're living in a snowy area, drive safe. Pack emergency gear. I live in South Dakota, and I tell you, it doesn't happen a lot, like maybe a few times every long stretch of years, but sometimes you get stranded on the side of the road, and it's pretty crazy how not only cabin feverish you get if you have to spend a couple days in your vehicle, but how cold it gets and how hungry and thirsty you get. So pack emergency supplies where you're going. Just take care of yourselves. Take a break from the markets over the weekend. Resist the temptation to look at everything all the time. Come back on Monday with a fresh set of eyes and a fresh mind. Trade well, trade smart. Don't trade too afraid and don't trade too excited. And we'll talk with you all on Monday. Have a good one. Bye-bye.